The world is witnessing a silent earthquake, one that could change the foundations of global trade forever. For nearly 8 decades, the US dollar has been the king of oil. Every barrel, every transaction, every contract has been priced and paid in dollars. But now a dramatic shift is unfolding, and at the center of it is India, Saudi Arabia, and the rise of new financial power centers. Reports from Riyadh and New Delhi suggest that Saudi Arabia has agreed to accept payments for oil not only in US dollars, but also in Indian rupees and Chinese yuan. This single decision could alter the balance of global power, weaken America's dominance, and reshape how the world economy functions. To understand why this is such a big deal, we need to step back. The US dollar became the global oil currency after the Second World War. In the 1970s, Washington struck a historic deal with Saudi Arabia. Oil would always be sold in dollars, and in exchange, the US would guarantee the kingdom's security. This was the birth of the petrodollar. Since then, countries from Asia to Africa have had no choice but to hold dollars if they wanted oil. The system created an endless demand for US currency and cemented America's role as the financial superpower. But times have changed. Washington's dominance is no longer absolute, and countries like India and China are now too big to ignore. India imports more than 80% of its crude oil, and Saudi Arabia is one of its top suppliers. For years, India paid in dollars just like everyone else. But after sanctions on Russia and the weaponization of the dollar system, countries began looking for alternatives. New Delhi quietly pushed for settlements in rupees, a move once seen as impossible. Today, that move is becoming reality. In recent deals, Indian refiners have begun experimenting with paying Riyadh in rupees, while China is already paying in yuan. For Saudi Arabia, it is a way to hedge against over-reliance on the dollar and align with the world's fastest-growing economies. But this is more than just economics. It is geopolitics. For the United States, the dollar is not just money. It is power. Washington can sanction nations, cut them off from the financial system, and influence global markets simply because of dollar dominance. If countries like India and Saudi Arabia shift even a portion of their oil trade away from dollars, it chips away at that power. Imagine billions of barrels of oil, worth hundreds of billions of dollars, suddenly being traded in other currencies. The impact on U.S. influence could be seismic. The rise of BRICS has only accelerated this process. With Brazil, Russia, India, China, South Africa, and now new members like Saudi Arabia, the group is building its own financial architecture. BRICS Pay, alternative trade networks, and talk of a new settlement currency are all part of this strategy. India's participation adds credibility, while Saudi Arabia brings the world's most valuable commodity, oil. If oil starts flowing in rupees and yuan, the dollar's monopoly begins to crack. Of course, Washington is watching closely. U.S. officials argue that the dollar is still dominant, accounting for nearly 60% of global reserves. But the trend is unmistakable. Countries are diversifying. Central banks are buying record amounts of gold. Bilateral trade deals are being settled in local currencies. The question is no longer whether the dollar's dominance will end, but when and how quickly. For India, this is an extraordinary opportunity. By settling oil trade in rupees, New Delhi reduces pressure on its foreign reserves, strengthens its currency, and increases its leverage in global markets. It also deepens its ties with Saudi Arabia and China, two nations crucial for its energy security and regional influence. But this shift is not without risks. Washington could retaliate with financial or political pressure. Multinational companies may hesitate to accept non-dollar contracts, and global markets, accustomed to the dollar, could resist sudden change. Yet momentum is building. Saudi Arabia, too, is recalculating its strategy. For decades, Riyadh depended on Washington for security guarantees, but today, it is diversifying its alliances. With China as its biggest oil customer and India as its fastest-growing market, the kingdom sees no reason to stick to a dollar-only model. The vision is clear: a multipolar financial world where no single currency dictates terms. For Crown Prince Mohammed bin Salman, this is also about sovereignty. Accepting multiple currencies gives Saudi Arabia freedom of choice. something the US dollar never allowed. Meanwhile, in Beijing, this is a dream come true. For years, China has pushed for the yuan to become a global currency. Oil payments in yuan bring it one step closer. Combined with its Belt and Road Initiative digital yuan projects and BRICS expansion, China is laying the foundation for a financial order where the yuan rivals the dollar. And with India joining in, the shift looks even more credible. The ripple effects will be enormous. Smaller nations in Asia, Africa, and Latin America may soon follow India's lead, demanding oil and gas contracts in their own currencies. The petrodollar system, which seemed unbreakable for half a century, could start fragmenting. For Washington, this is not just about money, it's about control. If countries no longer need dollars to buy oil, the US loses one of its most powerful tools of influence. That could reshape foreign policy, military power, and America's role in the world. But perhaps the most important question is, what happens next? Will the US fight back to defend the dollar's dominance? Will India, China, and Saudi Arabia push even harder for de-dollarization? Or will we enter a transitional era where multiple currencies coexist in oil trade? No matter the outcome, one thing is clear. The age of unchallenged dollar supremacy is ending. The world is moving toward a more multipolar system, and India is playing a central role in this transformation. The story of India and Saudi Arabia trading oil in rupees and yuan is not just about economics. It is about sovereignty, power, and the future of the global order. For decades, the dollar was the symbol of American dominance. Now, in boardrooms from Riyadh to New Delhi, leaders are asking a new question. Why should oil only flow through Washington's green paper? The answer may define the 21st century.